So over the last couple of months, I've gotten a lot of questions over how I decide which stocks I'm going to trade. And I actually have a set of criteria that I search for when I'm determining which stocks it is that I want to trade. And I'm going to be sharing with you guys in this video what those criteria are and why I have decided to choose those as my criteria. And actually, the first video on my channel, I actually showed you how to build a scanner in Thinkorswim that filtered by these criteria, but this video specifically will focus on why I chose these set constraints. And in just a moment, we'll hop into the video, but very briefly, I wanted to mention that we're very close to 1,000 subscribers. So if you guys could just scroll down and click the subscribe button if you're not already, it would make me very happy if we're able to hit 1,000 by the end of the weekend. So the first factor that I'm looking for when I'm deciding which stocks that I want to trade is what the float is. And if you're unfamiliar with what float is, it is the number of publicly traded or available shares. And I prefer to find a stock that has a float between 1 to 100 million, although I definitely prefer stocks that are under 30 million, and under 10 is even better. And now that we know what float is and what range of floats we're looking for, we probably want to know why it's important. And the reason why is that the stocks that have lower floats means that they have less supply, and then whenever we see an increase in demand, whether it's due to news or some other reason, we can expect there to be a lot more volatility, which is very important when we're trying to make money intraday. The second factor I look at whenever I'm deciding on which stock I'm going to trade is the price. And I typically like to trade in a range of $1 to $20, but I do have a preference on stocks between $3 to $10, as those are the ones that I typically trade the best. The third factor that we're looking for is a high relative volume, and you can look at the relative volume in a different time range. It's not too important. I like to look at the relative volume in the last 14 days, but you can go back up to a month or 6 months or even just a week. It's totally up to yourself. But I look at the relative volume over the last 14 days. And if I see a stock is having a 3 times relative volume, or say a 50 times relative volume, these can mean very different things. Because if I see a stock that has a low float, let's say a float of 10 million, but it's trading 20 million shares, which is say a 15 times more relative volume, then this is a stock that I know is going to have a lot of volatility because it has such a small amount of shares that are available to the public, and it's trading such a high relative volume that we can expect to see large intraday moves. And if you're a day trader and a scalper specifically like I am, then you need to have large intraday moves. Otherwise, you don't even have the opportunity to profit. And the next thing I look for, which kind of goes hand in hand with relative volume, is the actual volume itself. And the reason why you want to have a lot of volume, in addition to the volatility that we mentioned before, is also the liquidity. Because if you're trading a small cap stock that does not have a lot of volume, even if it has a high relative volume, what the issue will be is that you're unable to get in and out of positions whenever you want. There's not enough liquidity. So it's very important that you're finding small cap stocks that are providing enough volume for you to be able to get in and out of positions whenever you want. Because I've made this mistake before. I've traded stocks that were only trading 10,000 shares on a 1 minute candle, and the issue really came whenever I actually tried to sell for profit and I couldn't exit the position. So at the bare minimum, I will not trade a stock if it doesn't have at the very least 100 shares per 1 minute candle. The last two constraints that determine whether or not I'm willing to trade a stock is that it has gapped over 5%, which is to open 5% higher at the market open than it did the previous close. And then the other thing is that it has some sort of catalyst, which is usually in the form of some sort of news. And this is kind of important for a couple different reasons. And the first is that these two factors will both attract a lot of retail attention, which does contribute to more volume. And as we already mentioned, that volume is necessary for volatility and liquidity. And the other reason why we like to have a bunch of retail traders trading the stocks that we are trading is because institutions are far more difficult to trade against. And institutions also don't like to trade small cap stocks. So if we get a lot of retail traders coming into these small cap stocks, then the amount of institutional trading is going to be a very, very small ratio to the amount of retail trading. And, you know, institutions will spend billions of dollars to develop their algorithms. And the chances are, if you're going to be competing against institutions at large, you're going to lose. And when we're competing against other retail like day traders in a very volatile environment, our odds of succeeding are much higher. So to summarize the constraints that I'm looking for on the stocks that I prefer to trade, it is a stock that has a low float that is between $1 to $20, that is trading a high volume and a high relative volume, that has gapped up more than 5% on a news catalyst. And if you made it this far into the video, hopefully you learned something. And if you did, go down and make sure you're subscribed to the channel if you're not already. And then one quick reminder before the video ends, I'm going to be live streaming on 10-12, which is this upcoming Monday. And then on Tuesday, you're going to be seeing me on another live stream. Check out the YouTube channel called Beginner Trading, and you'll see me at Market Open on his stream. And with that, I will see you guys all later. Have a good rest of your weekend.